So last week the Fed came out and it did spook markets. For so long the Fed's been talking to the market saying that there's no way they're going to raise rates until 2024. And yet there were 7 out of 18 board members, I believe, that said they believe rates are going to raise as soon as 2023. Now, the markets had a bit of a panic, as you said. I've used other words to describe gold's incredible drop, but air pocket's probably more appropriate for going to air. So what have the Fed gone and done? They've gone and spooked the market. But is this a reactionary measure to the supposed inflation that probably won't be there by then? Or was this about explaining to the market that, perhaps they got it wrong and they do need to bring rates down, or rates up, sorry?
This is about central bankers pretending to know what they're doing and pretending to have some influence when they actually don't. I've never seen a time where the actions and comments of the central bank mean less. The 10-year note, yield to maturity, that's a big deal. The price of gold, that's a big deal. Stock markets, they're all a big deal. Look at all the. If you want to waste time listening to the Fed, be my guest, but I don't. I guess I do. I mean, I'm aware of it. I analyze and I write all the time, so I have to pay attention to it, but I don't give it much weight. I'll put it that way. I'll give you a couple inside tidbits that share with your audience that they probably won't hear anybody else, but I have one friend, I can't mention the name, but a true insider. Let's just say he probably sat in Janet Yellen's lap when she was the chairman, and Ben Bernanke before that, and now back with Jay Powell. So not a member of the board of governors, but an insider's insider. And he told me once, he said, Jim, nobody takes the dots seriously. The dots are when every member of the FOMC, whether you're governor, regional reserve bank president, or they're the members on a rotating basis, they put a dot where they think inflation is going to be, interest rates are going to be, growth is going to be, and when. So it's called the dot plot, and you got all these dots in it. He said, we wish we'd never started it. We thought it was a good idea at the time. We wish we'd never started it. Nobody takes it seriously. Nobody inside the Fed takes it seriously. The media talk it up, to no end. But so you can just throw the dots in the garbage. But they don't even take it seriously inside the Fed, number one. Number two, the Fed's now thinking about raising rates in 2023 instead of 2024. The Fed doesn't know what's going to happen this fall. The Fed can't tell me what's going to happen in September. I just told your audience what's going to happen in September, which is inflation is going to cool down and bonds are going to rally. But the Fed doesn't know that. They have the worst forecasting record of any financial institution in the world, with the possible exception of the IMF. But I think the Fed is actually worse. So every year, the Fed gives a 1-year forward forecast. So in 2010, they said, here's what's going to happen in 2011. 2011, here's what's going to happen in 2000, and so on. So it's a strip of 1-year forward forecast that they do every year. They have been wrong every single time by orders of magnitude. In other words, if they said growth is going to be 3.2%, and it was 3.1%, I would say, hey, nice going. You guys stuck the landing. That's awesome. Who cares? But they'll go through. They were saying 3.2%. It was like 1.8. And then they say, maybe we got to lower it a little bit. And they go 2.7, and it was like 1.7. I mean, they were just not even close for 10 years in a row. So, and again, you can look this up. It's all available online. They don't talk about it, but I will. And my point is, with a forecasting record like that, why am I supposed to think what's going to happen in 2022, 2023, or 2024? You don't. Now, they talk about it. I mean, the only central banker who actually knows that none of them know what they're doing, but he does a fabulous job of pretending. He's Mario Draghi when he was head of the ECB. Nobody, I don't know if it's the Italian actor thing, but nobody was better than Mario Draghi at pretending he knew what was going on. The only central banker who actually does know what's going on, she's the best central banker in the world, is Elvira Nabiullina, who's the head of the Central Bank of Russia. She's increased Russia's gold allocation to 20% of total reserves. So you look at Russia's reserve positions, publicly available. Let's go to the Central Bank of Russia website. Their reserve position is 20% gold. So in round numbers, it's about $500 billion, of which $100 billion is in gold. If you look at the ratio of gold to GDP, and that's, of course, Russia doesn't have as much gold as the United States, but they have 1/4 the gold that we do, but their economy is only about 1/8 the size.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now, let's continue.
So relative to the size, they have twice as much gold as the United States. So she knows what she's doing. She's about the only one. The rest of them, I mean, Reserve Bank of Australia, the Federal Reserve, Bank of England, ECB, Bank of Japan, they're the worst, but none of them know what they're doing. But they have to sort of protect their funny bone in the job, so they go through all the motions. But the point is, the Fed doesn't know what's going to happen in any of those years, and so, but they felt they had to do something. And because of this inflation narrative that we already talked about, they can't actually influence anything but except psychologically. So they were worried not so much that real inflation was coming substantively, but that inflationary expectations would get out of hand. That can become self-fulfilling. If you and I and everyone else actually does believe inflation's coming, we might start to act that way, and actually inflation might come because we're acting that way. That's called the self-fulfilling prophecy. The great Robert K. Merton came up with that phrase in the 1940s. So they were a little bit worried about that. So they felt they had to put on a show. Like, we're going to tell the world that we get it, that we're just as worried about inflation as they are. And maybe we'll raise rates a little sooner, and maybe we'll start a little bit of a taper. But all they were really doing was playing to the audience. They were just letting the audience know that they were kind of concerned about it. And so, but the market just got hit between the eyes. It was like, oh, well, here come the interest rate hikes, and here comes the taper. And so inflation must be real. So, interest rates soared very briefly. Gold took a nosedive. Stocks went down, and then they went back up again. But most of the action, the damage, I'll say, was in the bond market and the gold market, which is where you would expect it. It lasted about 2 days. It was serious. It was real. Interest rates turned on a dime after kind of going back up to 155. They're back down to 145, give or take. Gold has not made a full recovery. It's made about a half recovery. It dropped from I think it was around, earlier it was around 1860. It was, I think, 1830, the day of the Fed's announcement. Went down to like 1725, give or take, in U.S. dollars. Now it's back up to 1775. So it's made a partial recovery. It will regain the rest of what it lost, but it might take a month or so until we see the data that I'm talking about. But if beginning really now, because the next data we'll get early July, we'll get the June inflation, which will be June over June, but June 2021 over June 2020. June 2020 was, hard to do it by month, but the very end of the pandemic recession or the beginning of the pandemic recovery is right on the edge. So it might be a little bit hot, but not as much as May. But starting in July, August, September, when the U.S. economy was growing at an annual rate of 35%, you're not going to have those base effects. And you're going to have some of the other headwinds we talked about. Inflation is going to cool off a lot. Bonds will rally and gold will rally.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.